Welcome back to another episode of the Dealmaker Series. Today I'm joined by Rob Swift. He is a Senior Vice President in the Corporate Banking Division at Woodforest National Bank. Rob, thank you for joining us today. Tell us about yourself and tell us about the bank.
James, thanks for having me here. So talking about myself, as you said, commercial banker. I've been in the Dallas market for 20 years, focusing on corporate, commercial, and business clients of all sorts and types. The institution I'm with now has an attitude and a positive one of we're looking for anybody that's looking to do good business. And so we continue to just grow, trying to find quality clients for the bank and maintain the existing relationships that we have.
I like it. I like it. Very good. So without further ado, we can jump right into it, I think. What are you seeing in the current state of deal flow?
So, my deal flow this year, specifically, just talking about 2025, has been heavy. And I know that's not necessarily been the case for all situations, but when I look at where that's come from, it's a combination of a couple of things. One, it's for existing clients that we've known for years that continue to grow, that continue to find ways to kind of make themselves different in the marketplace and rely on the bank to help them with that growth. So we've been fortunate enough that we're able to continue to work with existing strong clients out there. And so that's been beneficial throughout the year. The other piece, though, is it's just that constant prospecting that I think all business professionals and all bankers out there are doing. And it's that constant work to go out there and find a new opportunity and a new prospect, and maybe a client that's looking at something differently and haven't had access to the lending world or understanding a good solid relationship with the banker. And so the other half of what I've seen besides the existing clientele has been clients that I may have been calling on for 3 and 4 years, and the opportunity exists now for them to kind of strike and make that acquisition, or maybe it's a partner buyout that we're looking into as well. And so it's just been, clients that we've known or wanted to know for many, many years is coming to fruition now in 2025.
That's great. That's great to hear you're doing well. It hasn't been like that for everybody, at least. And it sounds like your bank, particularly, it's very strong on relationships, which is always great to hear. That's what a bank should have too. Are there any particular industries or sectors that you're seeing that are really active right now?
You know, I've seen an assortment of different areas there. I think that the sponsor-backed world is continue to have that focus on the fragmented, smaller, services-based businesses. The HVACs, electricians, plumbers out there in the world trying to roll those up and solidify those organizations. But it's gotten very competitive in that space too as well. So I'm starting to see some higher dollar values go out there. So it's very well sought after by a lot. My clientele, if I look at it there, I have some of those industries I just mentioned, but we have others in other industries out there. We've got a little bit of food, hospitality. We've seen a lot of growth in IT tech services as well, which is the future of where we're going is high tech service based companies out there. And so I've had a lot of success in finding and identifying those and figuring out ways that I'm able to help those kinds of companies.
Yeah, technology is definitely quickly on the rise, especially here in DFW. What about deal structure? What can you tell us about the trends there? What have you been seeing a lot of here in Q3 or maybe just in 2025?
So deal structure for me has been consistent. I think that's probably key is consistency. Is that as I talk about calling on clients or existing clients or those I want to be clients, is to having that consistent message and being able to kind of perform what on a consistent basis what you promised in the past, or doing everything we can to do that. So for structure, it's very much the same for me. Now, in talking to other companies out there that are looking at acquisitions, some of them are strategically holding back right now. They're waiting for a reduction in interest rates for some of their models to make sense for a potential acquisition. So I got a lot of calls recently going, Rob, where do you think the rates are going to be? And all I can do is offer the best knowledge that's out there that's generally available to all of us out there. Go, well, we think rates are going to be lower a year from now, and they can work that into their model and see if they want to go out there and work something a year from now or 6 months from now too as well. And so there's some excitement about that. It's remained busy this year. I think the second half of this year or the last quarter of this year and next year, I think it's going to be, if rates do indeed go down, I think the market's going to heat up considerably.
And I want to touch on some of that here in a moment, but just kind of in keeping with deal structures, are you seeing outright purchases, or are you seeing a mixture on the capital stack? Are you seeing of equity and debt? Are you seeing things like a lot of earnouts or anything like that?
James, all of the above, right? So I'm seeing a variety of everything out there. There's not one leading structure that I'm seeing that's taken over that is the new norm of how business is done. Every acquisition is a different animal. In some situations you have an owner who wants to be part of that business for 5 to 10 years, and they'll sell a portion of it. They want to stay involved with the day to day. There's other ones out there where they just want to toss the keys up. They've worked their portion out there. They understand they have good management underneath them, and they're going to let it ride and take their payday and go from there. So the structures I'm seeing are everything you named, and it's every deal is different, and I'm seeing every bit of what you described on every single deal that I've seen this year.
That's interesting. One of the last interviews I had, it was a similar response where they were seeing a lot of just outright purchases and seeing less of those structures or those tools to mitigate risk, like an earnout or
Mm-hmm.
something along those lines. Whereas earlier this year, I saw a lot of that. Like everybody I spoke with, everything is an earnout. There's a rollover involved. There's lots and lots of hedging. And you're now one of the first few people to say it's not quite like that, but more of a mix. So
Yeah,
interesting.
it's a mix, and I'll tell you as a banker, and in the end of the day, our job is to manage risk and understand that process out there. When I see these items, these earnouts out there, and kind of these options to kind of keep the owners and creators involved with the company out there, they make me more comfortable. Right? When I'm there and I have expertise that's inside of those four walls that they're there, and they've created that business out there, I think it's easier to get more comfortable and mitigate risk in that situation versus that total just sell the entire company and let a new team come out there. And it comes down to strength and management too, of course. If you
Sure.
have somebody that's there that they're walking away to take their payday and hop off onto their yacht, but they have a senior manager who's been with the bank or with that company for 20 plus years, that there's a lot more confidence there versus we're going to hire somebody or we're going to bring somebody in to do it there. It makes me a little more worrisome. Um, so that's where my head's at when I look at those types of deals.
Yeah, for sure. So moving into my next question, you kind of touched on this a moment ago. What's the climate like right about now in Q3 with interest rates and tariff impacts? What is that looking like?
I've been fortunate enough that my clients, at least I'm talking about, have not seen a significant impact on tariffs. And that's just not that they're not happening. It's just my personal experience. I've not come across them out there. So I'll knock on wood and be thankful that we haven't had a dramatic tariff impact. And we may still see those impacts coming forward, though, as so many of the tariffs haven't been decided at this point. So on the tariff impact, I just can't comment because it hasn't personally impacted me. I've not seen it. We know that they're out there. When it comes to activity and tolerance, I think there's a lot of money out there, and I think there's a lot of pressure from investors to kind of deploy that capital and make some acquisitions. So I feel that there's some more pressure from the investors to go out there and make acquisitions and work it out. At the same time, they're still managing it when they're working with me with debt to make sure that debt's manageable and it makes sense to do everything as well. So it's a balancing act right now. That being said, if you're out there and you're in the marketplace, a good deal is a good deal. Waiting on it's probably not going to be the best idea right now. We can refinance debt. We can reschedule that down the road if you think that it's going to go lower. And if you don't want to miss a prime opportunity, that would be my take on it.
Not a whole lot of trouble coming from interest rates being where they are.
Not in my world. And so, once again, I have a lot of M&A. I have a lot of soul bank deals. And so I don't have any like consumer or not consumer, but I don't have a lot of CRE in my book out there. I don't have a lot of office. So it just in my world, I'm not seeing a lot of it out there.
Yeah,
It just doesn't happen to be in front of me right
that makes sense. So let's talk a little bit more macro, kind of relative to our region here. What makes DFW or Texas as a whole more unique than other markets?
now. I think it's the business friendliness of the marketplace. James, you talk to a lot of people. You probably hear this a lot. I've now been in Dallas for 20 years, but I'll tell you when I came here in 2025, I felt like I was just kind of welcomed with open arms with from the business community, from my fellow peers, from my competitors. It's just a friendly marketplace where I don't think you have to be born here and lived here your entire life to be able to get access to the many business players out there. And so by being able to kind of open doors as a new guy, once again, I've been here 20 years, I'm not that new any longer, but those doors are certainly easy to open up early on. So I think it's a friendliness towards one another. It's a friendliness towards business, and we're seeing, so many. It may have slowed down over the years, but so many companies coming in here that opens up opportunities to me. So when a manufacturer decides to move from Indiana to the Dallas market because it's a favorable business environment and it's better for their employees for quality of living, it's just another opportunity doesn't exist in other markets. Businesses are coming here. They're here. The business community, we're friendly towards those who are coming and vice versa. So it's just an open market out there for everybody to win. And I just don't think there's anything like that out there outside of Texas and outside of Dallas, specifically where I'm at. I have clients in New York. I was in New York on Monday visiting a client there. It's just a different world, right? Great clients, great companies out there. But if I were to move to New York City today, it'd be an uphill battle to establish myself as a banker out there. I think it would take years and years and years. Whereas Dallas, it's a much shorter span to kind of get yourself integrated in the business community.
Interesting. No, yeah, it is. That is generally the consensus I've gotten too, and I've been here for 20 plus years as well, so I can attest to that too. It's just somewhat of an easier place to do business, and legally we're easy to do business with as well. That's intentional. So, all right, let's look forward a little bit on my last question here. What do you see coming next in the M&A world, or just business transactions? What do you think is up next that's going to be a major change? 6 months, 12 months?
I don't know is the first answer. What I'll say there. I never seem to know. I'll never, so I'd be guessing at best. I will tell you, the optimist in me sees that we'll see continuing business as we had. I think we'll see a lot of capital that being deployed for growth. So my expectation and kind of where I'm looking forward is that I think we'll see everything that we have right now and maybe a pretty good bump and increase in deal flow that's out there. Pessimist me, which is much smaller, wonders, wow, we've had 15 years of a great run in business. I almost wait for some kind of, the black swan event that we can never predict.
Well, COVID.
COVID, yeah. Once again, they can't predict, but, COVID 2.0 or, something happens with private debt that's unanticipated out there. I don't know what it is, but part of me is just like, it's been a long time since we've had a real kind of kick in the shins. And COVID was a kick in the shins, but I think so many companies really pivoted so quickly and so well. I think it was a best case scenario of a really bad situation for a lot of companies out there and a lot of banks as well.
I'll take that. Yeah, I like that. It was. I guess it depends on who you ask, of course. But yeah, best case scenario of a bad situation. I could kind of go with that. I like that. Rob, I appreciate your insights. Those of you watching, hopefully this has been as useful for you as it has been for me. Those are great insights, Rob. I appreciate it. For those watching, if you'd like to find more episodes of the Dealmaker series and more insights, please check out my YouTube channel or my website at jamessackey.marketing. Rob, thank you for your time, sir.
James, thank you, sir.